Welcome back. The next corporate on our radar is NIIT Limited. Now, this is a company which caters on skilling, but skilling consumers, people like you and me. It's a B2C model, and this was demerged from the original business a couple of quarters back. In terms of their Q3 revenues are up on a quarter-on-quarter basis by 4.5%, but on a year-on-year basis, we've seen the revenues decline by 8.7%. Margins, though, have expanded to 8.3%. Their enterprise business is also scaling up on account of increased demand from GCCs, that's Global Captive Centers, and BFSIs. To talk more about the way forward, we've got Vijay Thadani, Vice Chairman and MD at NIIT Limited. Mr. Thadani, morning. This is Reema here. So, the first question is that we are seeing improvement. Your year-on-year revenue decline has been coming down. This quarter, revenues are down 8.7% year-on-year, but in Q2, the revenue decline was much more, 13.5%. In Q4, on a year-on-year basis, can you arrest the decline and, break up the demand that you see from IT services professionals, GCCs, and even BFSI?
Okay, so thank you very much. And I think you summarized it well, except I think our positioning now is to service both the consumers who are directly coming to NIIT as well as to enterprises who hire a lot of these consumers. And I think we have kind of a hybrid model of access. So skills and careers is the focus of NIIT, and that's what it will be. We have been focused on technology, and now I'm answering your question. In technology, the 33% decline that happened in the first quarter year-on-year, as well as the 13% year-on-year in the second, and now 9%, 8.7% in the third quarter, actually is basically caused by the freeze in hiring, and especially the early career hiring of IT firms and IT services firms. And within IT services, these were global system integrators, the GSIs. And you were very correct in making a comment that that part of that shortfall was made up by the GCCs, who are continuing to be very strong on hiring bids. The second issue is BFSI, where I think NIIT, very much like it is in IT, in BFSI, NIIT is emerging as a partner of choice for skilling needs of the banking financial services segment. So the decline which happened in GSIs, I think, was partly and now will be more than made up by the increase that we have seen in BFSI hiring and BFSI skilling. So I think that is the context. The important question which you asked was, have we been able to arrest the decline? Yes, we have. And I think in the next quarter, you would see actually a very strong YOY growth, though quarter 4 being a seasonally weak quarter, relatively compared to Q3, Q4, it will be much better than the previous years. Q4 is normally lower than Q3, but it will be better. It will still be lower, but it will be much better than before. And I think that decline will be arrested. What we are banking on for future is the hiring resumption in IT services, of which there are some green shoots, there are some signals that I think that may be beginning to start. And I think the person you were speaking to earlier before that was talking about the same, saying that the IT services are now getting back into a hiring and growing mode. So that's very good news for us as we go forward.
Okay. Mr. Thadani, hi, morning. Before I come to the margin picture, which of course is the silver lining in the quarter, just another question on strategy. You mentioned that obviously this quarter BFSI has been doing much better compared to IT. So in terms of strategy for the next couple of quarters down the line, would you look at growing BFSI more? I mean, to that sense, it perhaps is less seasonal than IT. Would you agree? BFSI seems to be more of an evergreen space. What's the thought process here between your mix, IT and BFSI?
Yeah, so I think one thing which has become clear and is that every sector, every segment has a cyclical trend, and that may be 4 or 5 years going up and then few years of stagnation and then again picking up speed. So what BFSI and technology mix taught us was that it is good to be broad-based so as to de-risk your overall performance. And I think that has worked out well for us. Going forward, I think we would need to de-risk it more because the volatility in global markets is become very, very high. Not only that, I think the opportunity size, and just taking 3 areas which are phenomenal opportunity. One is cybersecurity. As you know, we all are talking about cybersecurity and the cyber risks that all companies and societies are facing. The second is AI. We were discussing AI first in industry, AI in corporations. Now we're discussing AI in everything. Everything that we are doing can be positively impacted by AI. But how do we get talent ready for that? I think is a very, very interesting opportunity. And lastly, is the whole decarbonization. The whole decarbonization, I think, presents opportunity. So our strategy going forward, which will be beyond 2 quarters or 3 quarters, will be to de-risk as well as to take advantage of these growth sectors, of which we are doing some small work as we go around. But I think over a period of time, I think that activity will scale up. Essentially, our focus is to help early career students help realize their full potential. That's the business we are in. And whatever sector we are ready for, I think is what we would like to do.
Absolutely, sir. I mean, you've picked out the areas which are the hot areas, and everyone, including Mr. Satya Nadella, when he was talking to Shireen, was speaking about how AI presents an upskilling opportunity, and how quickly we can upskill the workforce will be quite critical and vital. We look forward to a longer conversation to discuss on these trends and how they'll impact, of course, financials. Perhaps we'll schedule that in the coming weeks as well. Thank you for joining in. Well, with that, we're almost out of time.